The long-term average is 40%. So gold would have to rise nearly 2x from here just to get to the 1989 levels. It would need to rise nearly 4x to get to the long-term average. And if we had an honest-to-goodness dollar crisis, like we did in 79-80, that was a dollar crisis. And gold was at the market value of U.S. official gold was 135% of our foreign-held debt. In other words, foreigners could have showed up with their treasuries and said, give us gold. And the U.S. still would have had a third of its gold left over after they had extinguished all foreign debt of the United States. I can tell you this exactly what's going to happen because I've lived it. I've seen it. Look, when in 1992, in my hometown, at this town square in my hometown, Strongsville, Ohio, we had late October, so right before the presidential election of 1992, we had President George Bush, Bruce Willis was there. Everyone in the area was there to see it, right? That's how important that region was in terms of swing states, how vibrant. 2016, I guess 6 presidential elections later, right? For 24 years. On the same day that Hillary Clinton said, you know, I disagree with Donald Trump's dark version of America. America is still great. Literally less than a mile from where President Bush had stood and given a speech, somebody walked in to an upscale brewery with an AK-47 and held it up at assault rifle point with his buddy with a pistol and locked the people into the freezer and made off with the money. And, you know, from drug overdoses being nothing in that region, you know, and when I say that region, I mean, you know, from 1992, drug overdoses in the Midwest, Rust Belt, tail. From 2008 through 2022, nearly 1 million Americans died of drug overdoses.
Insane.
When you then factor in suicides and alcoholism-related deaths into a basket that Case and Deaton, in their study called Deaths of Economic Hopelessness in the Wall Street Journal, you were seeing death rates in those parts of the world that were rivaling the death rates seen in post-Soviet Russia in the 1990s. Which, another example, you lose meaning, what do? You drink yourself to death, you use drugs. You go back in time, I have a friend of mine who's a Native American, Plains Native American elder. When they lost their meaning, when they started being fenced in, so to speak, right? What did they do? They drank themselves to death. So, like, the history is very clear. Like, there's no mystery, in my opinion, when you take the meaning of people away, what they're going to do. And yeah, to your point, it is very troubling. I don't, you know, it's one of these things where I know how it's going to go. Yeah. And it makes me sad. And I think the thing that's sort of like some of the division in this country is, you know, New York City, you know, some of the area, you know, there've been winners and losers, as there are in any period of time. But over the last 20 years of this globalization, there's been very clear winners and losers. And the winners have been very isolated by and large from exactly what I'm describing, certainly at the scale. They're not going to be isolated from this. They're going to witness it for the first time. And that kind of goes back to the point of, like, you know, they have more political power than sort of, you know, the people in the Rust Belt. Nobody cares about the Rust Belt. They care about Manhattan. When it comes to Manhattan, and oh, by the way, guess how they're going to react to it politically? They're going to elect, you know, Mamdanis of the world.
Yeah,
right?
100%.
And that's not going to make it better. It's going to make things trickier. So there are second derivative impacts of this AI thing that are simply not being thought through. And I don't know that it's been released, right? It's like it's a virus. Like, you can't stop it now. You know you've sowed the wind. Now you're going to reap the whirlwind. And
2 decades later, the tone of America shifted. Less than a mile from where crowds cheered national leadership, a brutal armed robbery shocked the same community. What was once a confident swing region had become another statistic in a broader national transformation. Globalization had redrawn economic borders, hollowing industries that anchored livelihoods. The contrast was impossible to ignore. Prosperity that once built local unity had given way to financial fracture. This was not just a crime story, it was evidence of a deeper national narrative, one where political rhetoric outpaced economic reality, exposing vulnerabilities decades unseen by much of the public.
I can illuminate on like what I'm hearing, which is that in the Middle East that was seen as a bridge too far. That essentially it was almost like a red wedding kind of thing, where they were invited under certain one auspice and then bombed in a city that is, I've never been, but I'm told it is very much like a Geneva or it's sort of a beautiful city with, kind of seen as like a neutral, everyone leaves their swords at the door and comes in and negotiates in good faith and then leaves. And this was seen as a violation of good faith in certain circles, is what I hear. And it was tricky as well for the United States because, the first story was, well, we didn't know ahead of time. And then which is not a good look for us, by the way, right? Is we are, we're the empire and we're being filled in on things after the fact. It's not a good look for the administration.
Is this when Trump said they don't know what the fuck they're doing? Was that in response to this? I can't actually remember.
It might have been. I don't know. Mm-hmm. I don't know. But I think it was not a coincidence that shortly thereafter the Pakistanis and it was the Pakistanis and the Qataris the Pakistanis and the Saudis did a mutual defense agreement. Well, Pakistan is a nuclear-powered country, or nuclear-armed country. They are a long-time close ally of China. And so to me, you can make the case that the Saudis just went under a nuclear umbrella of China of sorts. Which I think is really interesting because people say, well, there'll never be any change to the petrodollar system, et cetera, because, Russia showed you can make change to the petrodollar system if you have nuclear weapons. That was the lesson of Saddam. That was the lesson of Gaddafi. And so viewed through this lens, I'm not saying it's a right lens, but I think it's a lens worth considering, is that, look, the Pakistanis have deals with the Chinese. Pakistanis now have a mutual aid agreement with the Saudis. The Saudis don't have nuclear weapons technically. They, hey, we don't have nuclear weapons. No, we're abiding by everything.
You describe this as nuclear umbrella as a service, though.
It's a nuclear umbrella as a service, exactly. And if the Chinese bleed certain missile technology to the Pakistanis, who then use it or transfer it over to the Saudis, that's oops. Mm-hmm. So I just saw it as the whole daisy chain sequence, particularly in the context of what transpired in June, when the Israelis attacked Iran while we were negotiating still in theory. And it came out that the Israelis were running short of air defense missiles within like 10 days. And the U.S. had burned down 10-15% of its high-end air defense missiles, helping defend Israel within like 10 days of medium-intensity combat. Not high-intensity, just medium-intensity combat. To me, my overall takeaway is that the unilateral advantage that we have enjoyed in that region, we, the United States, have enjoyed in that region, seems to be gone. And if it's gone, then you're moving towards a more multipolar balance. And in that case, to me, you're going to end up with changes to the system, multi-currency energy pricing, maybe even by, parties that have historically only priced in dollars, more settlement in things like gold of energy surpluses at the central bank level, because, it's just another example, right? It was another violation of trust. Mm-hmm. When we grabbed Russia's FX reserves, I think Yanis Varoufakis, the former Greek finance minister, said perfectly. He said, I'm not saying they should or they shouldn't have done it, but they did it. And when they did it, okay, then people say, fine, we're gonna start buying a lot more gold rather than treasuries, and that's what's happened. And in the same way, I think this was seen in the Middle East as a violation of trust of sorts, and a view of, well, okay, well then we need to start making alternative arrangements or even just threatening alternative arrangements. And I don't, it's one of these things, I think once you see it, you can't unsee it. And so I think it's more of sort of a move towards multipolarity that this move, by the Israelis bombing Doha seems to have engendered.
From 2008 to 2022, economic dislocation fueled a deadly surge of addiction across the American heartland. Studies estimate nearly 1 million overdose deaths across the Midwest and Rust Belt in little more than a decade, surpassing fatalities from most modern wars. When suicides, alcohol-driven illnesses, and drug-related mortality are grouped together, analysts describe it as economic despair fatalities, matching grim death rates seen in post-Soviet nations after social collapse. This phenomenon is not just medical, it is sociological. Loss of industry, fractured identity, and evaporating hope created a new public health catastrophe America was unprepared to confront.
I think there's only one currency that can replace the dollar on that as an oil currency, and it's gold.
Mm-hmm.
And so I think it's noteworthy that the gold to oil ratio has gone from like 55 to 65 in like a month since the Israelis did that. What does it mean for the bond market? I mean, it ultimately, I think, just further accelerates a trend we've already seen, which is as we have seen the marginal oil barrel priced outside the dollar over the last 10 years, you're going to see more of the marginal oil barrel priced outside the U.S. dollar. There was an article yesterday on Reuters that India is buying oil from Russia in Chinese yuan. Like Iran and India and China are very big oil buyers. They're 35% of the world's population, right? They're all both buying oil outside the dollar now. Like the petrodollar has been like it's like it's like putting a hole in an airframe at altitude, right? Like it doesn't take a really big hole for you to lose pressure and start to have bad consequences. And I think that's, what does it mean? I think it ultimately means that the U.S. would have to either significantly shrink deficits, which it can't because the debt's too high and the government spending as a percent of GDP is too high. And so until you devalue the debt, you can't shrink your deficits without going into a debt spiral that we touched about earlier.
Mm-hmm.
Or ultimately, you have to run hotter. You're going to have to inflate away debt. You're going to have to nominally grow. You're going to have to invest. And so to me, I think ultimately, what does it mean? It just means the real value of treasury bonds. And I would, as a proxy for that, I'd look at GLD over TLT, right? The GLD ETF, the gold ETF over TLT, long bond ETF, which is, going vertical now. The gold is crushing along the treasuries. I think it's going to accelerate. It doesn't necessarily mean that the price of treasuries in a vacuum has to crash because there's a number of different levers. But I just think the real value of the treasury market will deteriorate more and perhaps faster as a result of that.
History offers chilling parallels. Across civilizations, when communities lose cultural meaning, self-destruction rises. In post-Soviet Russia, loss of national structure fueled mass alcoholism. In indigenous North American communities, land confinement triggered generational trauma and addiction. The data may vary, but the human pattern is consistent. Erode identity, restrict livelihood, remove purpose, and despair follows. This cycle now re-emerged in America's industrial belt, not through ideological collapse, but economic isolation. The lesson is stark. Societies don't fracture when they fail suddenly. Societies break when their people feel forgotten long enough.
I think that's the plan. I think ultimately...
Does that become the almost new petrodollar system?
Yes, is the short version. I think that's the goal. I think that's what they would like to have happen. Can it work? I think, number one, let's call it what it really is. We can't issue long-term bonds anymore. at rates that we can afford, that don't blow up our existing debt and put us into a debt spiral. So we are going to let stablecoins, which are near cash equivalents, proliferate. Translation: we are going to finance our deficit in near cash markets. We're running a 7% deficit. We're going to finance it in near cash markets. Now, stablecoins yield 0. Short-term rates in the U.S. still 4-ish. I wouldn't be surprised at all if the administration, if this is successful. If you don't get Besant to come out in some sort of non-transferable or non-redeemable T-bills into the stablecoin market, which is to say everything in a stablecoin is non-redeemable, and they're not going to yield 4, they're going to yield 30 basis points. And he will have reduced the deficit from 7 to, once you have enough of the bonds in there, from 7 to 4, like that, right? Because so much, $1.5 trillion of the deficit on a gross basis is interest. And if you finance enough of it, the math is oversimplified. But again, let's not lose sight of what we're doing here. And by the way, when you take rates from 4 to 30 basis points, now it's really it is that far from financing in cash markets. 30 basis point 3-month T-bill and cash, they're like kissing cousins.
Basically the same thing.
They're the same thing. And again, this is what has to happen. This is not, I'm not trying to reflect badly on the Trump administration, this was in the cake. When you do dumb stuff with borrowed money for 40 years and you follow an economic dogma of globalism and neoliberalism the way we have done so for 40 years to such an extreme with no balance, you eventually get to this point. And you could take it even broader and say, this is how fiat currency, this is what you do. Fiat currency systems end up financing in cash markets. And then, the inflation inflates away the debt. This is what they're talking about doing. The stablecoin aspect and the sort of new petrodollar side of it is essentially, taking the Europeans' heads, we're barely keeping our heads above water in debt, and basically taking the Europeans and so the rest of the world, shoving them underwater and standing on them and be like, okay, we're okay now. And we would be for a bit. But to me, I think it's super important for investors. Someone said it to me once, said, wisdom is calling things what they are, or seeing things for what they are, not for what they're called. And so stable coins, new petrodollar, all, dollar wrecking ball, all this stuff, they're financing deficits in near cash markets because they can't issue enough bonds at the long end at rates that don't blow up the debt. And as an investor, once you understand that, you're like, oh, you can get enraged about it or whatever. I know what to do with that. I absolutely know what to do with that.
For decades, the U.S. held unquestioned economic influence. But foreign policy missteps, reserve seizures, and new military realities have accelerated a shift toward multipolar global power. Nations that once depended solely on dollar trade are diversifying toward gold, emerging digital currencies, and strategic security partnerships. Recent transactions between major energy importers, Russia, India, and China, indicate a growing appetite for non-dollar energy pricing, reshaping global finance. Markets now see currency stability hedges like Bitcoin and gold outperforming Western sovereign bonds, signaling a structural rather than cyclical transformation in financial trust.
The way things have evolved, the average person should probably have, in my opinion, 20% of their liquid net worth in some combination of gold and Bitcoin, depending on their risk tolerance, age, proximity to retirement, etc., right? Because obviously, I think over time, all else equal, Bitcoin probably wins relative to gold. But there's ways that there's ways maybe it wouldn't, but let's set those aside. But then, but Bitcoin in the meantime has been proven to be far more volatile, and that matters for the average investor. So, but yeah, the way things have evolved, and the way things are evolving with AI, especially, right? Because we can just talk about the debt side and you're like, okay, we can see what they're doing. But AI is accelerating this. Like, that's the tricky part around, like, you can see, interest never sleeps, right? So compounding interest, it's the eighth wonder of the world. It's just going up and up and up. And that's, why they are having to issue shift more of the debt into, it's why, Besant came in and he doubled the run rate of treasury buybacks that Yellen was doing. Like, and mostly shifting from long end to short end. Like, it is what it is. I would be doing the same thing. He's not a bad person for doing it. Math is a math.
And it's the stuff he said he didn't want to do.
It was the stuff he didn't want to do. Yeah. You know what? I want to go play in the NFL. I don't want to fly commercial, sorry.
Yeah.
The math is the math. And when you look at the math as the math and then you overlay the stuff we're talking about with AI, that's the really tricky part, where we've got exponential functions in two different directions happening. And that means it's going to happen like way, way faster than we think. Will the stablecoin thing work? Maybe. I don't know. He needs to get trillions into stablecoins. Where is he at today? 300 billion, 400 billion? Like, it's not happening fast enough. Mm-hmm. He needs to be at like 2 trillion by like mid next year. And that has implications, right? Because that means he's got to issue the T-bills, and the stablecoins got to get issued. And those are like, you got to start, and oh, by the way, the banks, one of the provisions of the Genius Act is that the banks can use reserves to back stablecoins. Well, the whole reason QE wasn't like wildly inflationary, and I and lots of other people, this was pre-FFTT, I was just, sales guy on a desk. I thought it would be, but then as you read up and as time has gone on, it hasn't been as inflationary as feared, not by a wide shot, because essentially so much of it was sterilized in bank reserves. Banks were paid a bribe by the Fed to basically take the money they gave them in QE and just hold it. If stable coins start being used in day-to-day life, as banks are issuing them backed by reserves, you're mobilizing trillions in reserves. And now just ascribe a modest money multiplier to that. All the QE inflation that was, all that was feared and never arrived,
is coming
like a freight train, as our friend Lynn would say. So, and again, this was always in the cake. There is no, the math is the math. And that's why I say the events, you need to protect yourself. Like this, we all enjoyed the party, whether we voted for it or not, right? Boomers and silent generation are getting 70% of record tax receipts and entitlements. And yes, they did pay into that. They didn't pay that much for it all. Mm-hmm. There's been inflation of services, et cetera. They're taking out more than they put in. That's why the deficits are what they are. And oh, by the way, our politicians spent their money as they put it in. They're spending our money as they put it in. So, yeah, it's somewhat cliche. You need to own gold and Bitcoin, but you need to own gold and Bitcoin. We're in that part of the cycle. It just is what it is. And I hope, after it's over, then, I can leave a note in my will for my grandkids or great grandkids and say, listen, there's going to come a time around, 2085 and you're going to want to start buying some gold again. And I'll be done with it for the rest of my life. It's the arc. That's all it is. Gold and Bitcoin is just the arc to get you through this monetary storm, this monetary flood. And I write about it a lot more because that's what's happening. Mm-hmm. It's accelerating. I'm the water's up to my knees and I'm still coming in. It's like, well, okay, get busy building the arc faster.
It's funny though. It seems like the world is now waking up to this. JP Morgan came out with their debasement trade. The only thing that I'm not sure about with that is if it's even a trade, because that assumes you get out of it at some point. Is there a world where you do see selling your gold? And
sure.
When does that time come?
For me, gold specifically, I look at it as a what's the price of the dollar, right? Ultimately. So one of the metrics, as you know, I've published a number of times, is the market value of U.S. official gold relative to the foreign held portion of U.S. Treasuries. And with this magnificent gold rally that we've had, that ratio is 11%. In other words, if at market price, all U.S. official gold, if we have it, I'm assuming we do, collateralizes our foreign debt at 11%. In 1989, that was 20%. As the Berlin Wall came down, we went into our unipolar moment. It bottomed at like 6%. The long-term average is 40%. So gold would have to rise nearly 2x from here just to get to the 1989 levels. It would need to rise nearly 4x to get to the long-term average. And if we had an honest-to-goodness dollar crisis, like we did in 79-80, that was a dollar crisis. And gold was at the market value of U.S. official gold was 135% of our foreign held debt. In other words, foreigners could have showed up with their treasuries and said, give us gold. And the U.S. still would have had a third of its gold left over after they had extinguished all foreign debt of the United States. That was a gold bubble. We had 135% backed foreign debt. Today it's 11. And things are not getting better, they're getting worse. And oh, by the way, in 1980, 30% debt to GDP, 2% fiscal deficit. Entitlements were nil. We still had an industrial base.
Things were great.
And they had the ability to raise rates to 15% to defend the dollar. Mm-hmm. We can't raise rates. They tried to raise rates to 4 to defend the dollar, and everything went pear-shaped. All of a sudden they're doing BTFP and this and that and what have you. So there's no ability to raise rates to defend the dollar. It's all going to have to. So the answer to the question is, it's 11% of foreign held debt today. I don't know. The very earliest I would think about selling any gold would be that 20% number, but it's dependent on events. If we're seeing things evolve such that there's actually a path forward to fiscal austerity versus just run it hot, okay, maybe 20% is a number. More likely, I wouldn't even consider till 40%. Now 40%, that gets you, what is that? $16,000 gold, $15,000 gold. I would probably take some out there. I would lend some to the federal government at 4% at $15,000 gold, or maybe I'd buy some farmland at that point, or some other more productive asset. But it's about the price of the dollar in real money terms, in gold terms. Bitcoin, I think, is a newer asset. I think it's gonna be more volatile. For me, it's all about what's the price of the dollar. What's happening, and with Bitcoin, there's also a geopolitical hedge, mm-hmm. right? And I never thought, look, I'm not going anywhere. I'm staying here. Like I love this country. I was born and raised here. I'm an Eagle Scout. Like I'm not leaving, right? For the meme, I'm not leaving. I'm not fucking leaving. But it does give you some optionality for periods of time, right? Yeah. Like in a way that gold doesn't, simply because, it's hard to fly somewhere with any real amount of gold. It's really easy to fly anywhere with enormous amounts of Bitcoin, or it's really easy to send, Bitcoin over a Zoom call to friends, family, etc. around the country in a way that is just impossible with gold. So for me, it's all about what's the valuation of the dollar sort of relative to these assets. And what am I watching? What am I seeing? Like, are things getting better? Are things getting worse? What's the political, and unfortunately, sort of across the board, a lot of the metrics, I think I wrote it a couple weeks ago, like 2 weeks ago, I'm still buying gold and Bitcoin every week because, the other side of that is, when do I want to buy dollars relative to gold and Bitcoin? Hey, it's Friday. Do I want to buy gold? Do I want to buy dollars and sell gold and Bitcoin? No, based on what I'm seeing, no, not yet. So I'd have to start seeing that, and I think the prices are way higher before that balance is in my own mind.
The new era carries two competing exponential forces: rapid AI-driven economic disruption and unstoppable national debt expansion. With long-term bond rates becoming unsustainable, governments are shifting toward cash-adjacent financing like stablecoins and ultra-short-term debt. The inflation many feared but never fully arrived during QE may re-enter through monetary velocity, drastically eroding currency purchasing power. Traditional savings vehicles face existential risk. This is not alarmism. This is arithmetic. The most durable hedge against currency instability has historically been gold, and the fastest modern parallel has been Bitcoin. Adaptation is no longer strategy, it is necessity.